Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about promising setups that don't work the first time. We've all been there. A great looking chart, great pattern, great sequence, volume is good, everything is on board. It's as close to a no-brainer trade as there is. But then it doesn't work out. You buy a breakout or a dip, and within a day or two it fails. You exit the trade, kind of pissed off, and you remove it from your list. Okay, it sucks. You really thought the trade had great potential. Then a month later, you accidentally bump into the stock during one of your research sessions, and you realize that the failed trade was just a little bump in the road. The stock righted itself soon after and ended up doing exactly what you thought it would do. Okay, so let's discuss a couple of these trades and how you could have played them. So here's Green Sky. We profiled it at Leavitt Brothers. It obviously was a weak stock, moved up, based a little bit, moved up, got supported by its 50, moved off its 50 and was consolidating here at a higher level. So I posted this as both a breakout play and with a suggestion that you could zoom in with an intraday chart and probably find an entry on a dip to play. So pretty good looking chart. Then this happened. Okay, you can see the stock did actually break out, but then the very next day it gave everything back, and then the day after that it fell even further. So if you got in at 13.5, then you're definitely out at 13. Okay, it was, I'm not going to say it was a fantastic chart, but it was a pretty good looking chart to have a base this big, come up and get supported by its 50, move up, consolidate at a higher level. Definitely a good looking chart. But when it takes out support there, you got to get out. Okay, even if you love the stock, you got to get out. Then this happened. Okay, the stock actually didn't fall that much after that. Okay, it found support at its 21-day EMA, continued to establish itself, established resistance at 13.5, and was actually looking pretty good again. And then this happened. Okay, it broke out. And now it's up over 15. Okay, we actually profiled this again at Leavitt Brothers. Okay, so the point being is this was a really good looking chart. It failed. You get out, you take your small loss, but then a couple weeks later it actually resets up and goes again. Okay, we don't know why it broke out. Okay, maybe on this day right here, I don't know, I didn't go check. Maybe on that day the entire market was up a whole bunch. Okay, so maybe the stock really wasn't ready to break out, but the entire market kind of forced it to break out, and it just wasn't ready. So it came back down, did a little bit more consolidating, and then when it was ready to go, it broke out and moved. Okay, so the point being, don't give up on a stock just because the first move doesn't work. Okay, take your small loss, step aside, let the dust settle. Oftentimes the stock will reset up again. Let's look at another example. Here's Yeti. Okay, you could have played it here, maybe not. But after it broke out, surged on big volume, it was profiled at Leavitt Brothers up here as both you can buy a dip within the range and you could play a breakout. Then this happened. Okay, stock breaks out, closes off its low, next day gaps up, and then just gets slammed. Okay, this is the biggest red candle on the entire chart since over here at the end of November. So at that point in time, who knows? Maybe this stock's going to do this. I mean, look what happened last time. Okay, so if you were in this, if we played it, you're either out here or you're definitely out here. Okay, even if you zoomed in with a moving average and you saw, I don't know, maybe there was a moving average that kind of came up like this on an intraday chart, and even if you had that as your stop out point, fine. If you wanted to give it a little more space to move around, but you're certainly out when it breaks support over here at 23.5. Okay, but still, that doesn't, just because it didn't work out doesn't negate the fact that it's a strong stock in an uptrend at an all-time high, and you got like strong volume in here to support the move. Okay, so step aside, take your loss, but then keep it on your list, because what happens is the stock found support at its 21-day EMA. It immediately recovered that entire loss here. So it dropped from 24 down to 22.5. The next day it recouped that entire loss. Let's zoom in with a 60-minute chart just to kind of highlight this. Okay, so here was the first breakout that failed. Then here was the stop out point. somewhere in there where it kind of took out support at 23. But then as you see, even though it took out 23, it immediately recovered. It came over here, got above its 50 on the hourly chart, established itself over the moving average, and so therefore it was once again in play, and then it ended up doing this. Okay, that where it established itself above the moving average was like right in here. Okay, so it broke down, but it immediately recovered, established itself, and then it took off. Okay, so like I said in the last chart with green sky, who knows? Maybe when it broke out here, the entire market was up. Maybe there was some news out. Okay, each stock has like its own clock. It has its own rhythm. It'll move when it wants to move, but sometimes outside forces induce it to move before it's ready. So you get this happens. It breaks out, but then it fails. But then it eventually does what it wants to do. Maybe if the stock wasn't induced to move on this particular day, if we extend this trend line over, maybe it would have just done this. Maybe it would have just traded in here, for another week or two, and then it would have broken out. Okay, but because maybe there was news, maybe it just gapped up too early, it moved up too early. Okay, you just don't know. Okay, so when a perfectly good chart moves and then fails, you got to get out of the position because you don't know what's going to happen. But keep it on your list because oftentimes you get another trade at a later date. Okay, one more example. Here is mRNA. Okay, we played it at Leavitt Brothers over here. Like the double bottom, the double bottom W pattern here came up, kind of moved up to a higher high and then consolidated and then moved up from there. So we profiled it here, moved up, was putting in lower highs, lower lows, but was establishing itself over here at the 50-day moving average. We were looking at the 20 as a key area. Okay, so it was resistance here, and you got the 21 EMA. There was some support there, some support there. We had 4 days in a row where the 20 was fairly important there. See, it was kind of important there. We have 2 candles there, so the 20 seems pretty important. So our idea, our goal here was that even though we had lower lows and lower highs, we thought if it can get above 20 and establish itself, then possibly we can get another run, at least back up to like 22.5, the previous high. So if I zoom in with the 60-minute chart, basically just highlighting what I just said, support here at 20, 20, 20. Okay, so I was thinking if this thing can come up here, and this is the hourly again, if it can come up here and come back down, and the hourly moving average can do something like that, then I thought, hey, if it can establish itself above the hourly 50-day moving at the hourly 50, then I think we can go back up. So that's what I was looking for. So then this happened. So right here, it did in fact take out 20. Okay, closed above. The next day, it closed above again. So it's starting to solidify itself. It's above its 20, which was resistance. It's above the 21 EMA on the daily. And then this happens. The stock gets hit hard. And you know what? At that point in time, you don't know what's going to happen because you have this big move. You have this big move. Who knows? Maybe the stock is going to do this. Maybe this thing is going to go back down into the teens, 18, 17, who knows? So you got to respect this. Okay, we had this as a breakout play at like 20, and when it lost 20, you could have definitely said, look, I'm standing aside. I got in. I had a 1-point profit at one point in time, but it gave it all back. I'm not sticking around. The stock's too volatile. So if I zoom in with the 60-minute chart, okay, just to highlight, here's that 20 level. And you can see, resistance there, and then it got over, and then we got support and support several times, 20 supported, and then it lost support. So you could have very easily just said, I stepped aside. Good stock, good potential. I liked it. It could, it could have run up 10, 15, 20%, but it couldn't hold the 20 level, so I'm going to step aside and take my small loss. Okay. But it established itself at the 50, moved up, reestablished itself above 20. Okay, so here's the 20 level again, lost the 20, but then the very next day it reestablished itself above the 20. Okay, so there was a re-entry there, and then this happened. Okay, and this is, I'm flipping back to the daily chart. Okay, so that candle there was just that, and then the stock was off to the races. So again, who knows what happened on this day? Okay, you don't, I mean, this, you know, down, up, it could have done this. You don't know. Okay, so you got to get out, step aside, see what happens. But when the stock reestablishes itself and goes up, then it's playable again. Okay, we don't know why the stock moved up here. Again, maybe the whole market was strong. Maybe what the stock wanted to do is just kind of base here and then move up. Okay, but because the market was strong, it ended up getting pulled up, you know, prematurely. So you step aside, let it go, but then once it reestablishes itself going up, then you could play it again. Okay, so my point is, just because a stock fails the first time doesn't mean it won't eventually work out. Okay, every stock has its own clock, so it'll move when it's ready to move, but sometimes it moves too early because of the overall market, because news, things outside its control, and then that premature move ends up being given back. But if you continue watching it, continue charting it, sometimes you get another move, you know, a week later, 2 weeks later. Sometimes it's just a day or two later. Okay, so don't give up. If you have a really good chart, like really good, like wow, look at this, it looks great, and it doesn't work the first time, step aside, let it develop a little bit further, and oftentimes there's a chance to play it again. All right, thanks for listening. If you like the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. We provide market analysis and trading ideas to individual and institutional traders and investors. Again, thanks for listening, and I'll see you next time.